Podcast Network Asia.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
Hi investors, this is Anjz and I'm back with another episode of Philippine Stock Market Wrap-Up. Today, we'll take a quick look back at Feb 2026, the key economic events, data releases, and market-moving factors that shaped investor sentiment and drove market trends. I'll also touch on the Middle East crisis and what it means for the local stock market. Alright, let's dive right into it. In Feb, the PSEi rose by 4.46% to 6,611.24, up by 282.77 points. As the month kicked off, markets were digesting the full year 25 GDP print, which came in softer than expected at 4.4%. At the same time, government disbursements on capital outlays fell to a 5-month low in November, down 45.2%, while overall spending slipped 27.2% amid ongoing corruption probes. Still, it wasn't all negative. These were offset by a couple of data releases. The country's manufacturing PMI jumped to a 9-month high of 52.9 in January, signaling improving industry conditions. Meanwhile, S&P Global Ratings reiterated the Philippines' potential for a future upgrade to BBB+. Fitch Solutions BMI also maintained its 2026 GDP forecast at 5.2%. Citing expectations of a second half 26 rebound in public spending, the lagged impact of BSP rate cuts, and firmer household consumption, especially among remittance-dependent households, benefiting from the weaker peso. Inflation for January 2026 also came out. It was slightly above expectations at 2%, but it's still well within both BSP and government targets, reinforcing the narrative of steady domestic demand. By mid-Feb, the PSEi started to pick up following the MSCI quarterly rebalancing results. The MSCI Philippine Standard Index remained unchanged, with JFC remaining in place, while Apex and Maynilad were added to the MSCI Philippines Small Cap Index. Momentum was sustained after the BSP cut policy rates by 25 bips to 4.25%. And full-year 25 earnings results from index names came largely in line with expectations, providing additional support to sentiment. Foreign inflow stayed strong towards the end of the month, eventually pushing the market to a fresh 52-week high of 6,625.46 before it eased slightly toward month end. Next up, let's talk about some stocks which had significant movements or developments in Feb. First, on gold mining stocks, there's Apex, OGP, and PX. The weekend before Feb started, President Trump announced Kevin Warsh's nomination as new Fed chair. This, in turn, caused gold prices to plunge to its steepest day-on-day decline in a decade. Warsh, a former member of the U.S. Fed's board, is widely regarded as hawkish on inflation. This stance typically puts downward pressure on gold prices. When the market opened on Monday, Apex, OJP, and PX felt this steep decline. Broad-based dip in metal prices following Kevin Warsh's nomination was also felt by other mining companies such as nickel and AT. These stocks have since rebounded and are back to record highs, as global volatility, including geopolitical tensions, continue to reinforce gold's role as a safe haven asset. Moving on to MSCI rebalancing-related news. Again, as a recap, JFC remained in the MSCI Philippine Standard Index. This outcome eased investor concerns, especially after speculation late last year about a possible removal from the index. Additionally, Apex and Maynilad were added to MSCI Philippine Small Caps Index. Changes have already taken effect on March 2. Another noteworthy news was regarding SEC's bid for the extension of its coal operating contract, which expires in July 2027. For context, The Kunsunhi-led firm accounts for nearly all of the country's domestic coal output. Under legal guidance from the Department of Justice, the DOE will instead open the Semirara coal contract to competitive bidding, meaning SEC will lose its guaranteed operating rights unless it successfully wins a new bid. SEC is still eligible to participate in the auction, and the DOE has indicated that bidders will be assessed on qualifications rather than simply offering the highest price. Now, the stock plunged to its 3-year low when this news came out, as investors grew increasingly anxious about the company's future. The way we see it, we echo management's view that SEC is favorably positioned to win the auction, underpinned by 2 key factors. First, SEC's deep operational expertise and long-standing familiarity with the island, which provide clear execution advantages to it. And another one, the existing infrastructure and equipment positions SEC ahead of potential competitors. For the full breakdown, check out our 2 recent traders' playbooks on SEC. You'll find it on the platform along with detailed notes from management's briefing. For March, expect a lot of attention on full year 25 earnings as we're currently in the thick of it. Don't worry because we'll keep you posted in these developments. In fact, we release earnings-related reports as we go along this season. You can easily access them through the platform under the Research tab. Go to FirstMetroSec and simply look for Company Report and our Traders Playbook for more guidance. Now, shifting over to international news, let's talk about our early read on the Middle East crisis and what it could mean for the Philippine stock market. For airlines and logistics, with tensions dragging on, downside risks are building for players like SEB, PAL, and ICT. Higher jet fuel prices, disrupted airspace, and potential route suspensions all put pressure on margins, especially for airlines. For ICT in particular, the direct impact remains limited in our view. Its only exposure in the Middle East is Iraq, which handles about 2,000 TEUs out of the company's total 23,853 TEU capacity. So, any operational impact should be manageable. In fact, as early as their 9M25 results, management had already pointed to some softness linked to the region's geopolitical tensions. So, some of these risks are already reflected in current performance and expectations. That said, ICT could still feel some indirect effects from broader global trade disruptions and higher bunker fuel costs, which could weigh on near-term earning sensitivity. We have a buy call on ICT with a target price at 750 pesos. Shifting to fuel distributors like Shell and Petron, these companies may see short-term volatility from rising crude prices. But since they typically pass on fuel price movements to end users, margins are generally protected. The trade-off is that significantly higher prices could weigh on demand in the near term. So, what now? While near-term volatility is likely as global markets digest geopolitical risk, we do not see the Middle East crisis as a fundamental derailment to the EM flows narrative. For long-term investors, pullbacks driven by global risk aversion should be viewed as selective accumulation opportunities rather than a signal to materially de-risk. The PSEi remains largely insulated on a fundamental basis, as most constituents are domestically driven and not directly exposed to Middle East trade flows. Outside of ICT and transport-related names, we see limited direct earnings impact from the conflict. We recommend increasing exposure among MSCI Philippines constituents, which are key beneficiaries of a fund flows-driven rally. Alright, that's it for today's episode. If you found this helpful, make sure to follow us on our socials. That's Securities on Facebook, Instagram, and YouTube, and FirstMetroSec on TikTok. If there are any topics you'd like for us to cover, feel free to send us a message. We'd love to hear from you. Thanks for tuning in, everyone, and have a profitable month ahead.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.
First MetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and First MetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of First MetroSec. First MetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.